Hello, warriors. I'm here to impart some wisdom. I have all this wisdom in my head. It makes my head want to explode, so I have to express it to you guys. It's cathartic for me. So let's start with what happened yesterday. Something that you were made aware of by me. I'm not going to say we, I'll say me, that yields look like I was talking about the 10-year last week about the divergence here, and the yield drop really accelerated yesterday on the jobs jolts numbers. So we've come down pretty good, close to 25 bips. So if we get a strong employment number, I would use that to sell rallies here. The other major part of that equation, and I didn't think it was going to happen until today, but it happened yesterday, is what's happening here in US dollar yen. So we had that key reversal. Have to look at it on a daily basis, and this is a very important inflection point. So to me, this is a pretty negative week. I know my guard was down because it's the last week, right before Labor Day, holiday weekend. I thought, I kept saying, well, wait for the big money to come back from the Hamptons and everywhere else the hedgies go, and return to their workstations or wherever they trade from next week. But this is pretty significant. What we had yesterday actually was a key reversal because we had this real tight range in here. So I think this is a significant top in the yen. I'd be surprised if we could take out this high now. So if we had a decent number, I think you have to be in a sell the rally mode in US dollar yen. So maybe back after this decline stops, look for some type of fib retracement. We had one already today, which came off on the numbers that we had today, which were also weak, I believe ADP. Okay, so let me move to the pound because just to show you how important discipline was. So, I said to short it this day. When we were live, it was exactly a week ago. So if you got your shorts, and then we had this breakdown, and I said, take partial profits on it. And I said, I have to give the breakdown a chance. So this was Friday. We couldn't close under it. This was yesterday, I believe, and we couldn't close over it. And then we started penetrate it, and that was your out. Okay. So being disciplined and knowing where you're wrong. If you're trading a breakdown and the breakdown is a gated, you have a false breakdown, you get out of the way. Did I reverse? No, because I'm now looking for better spots to start shorting cable, to start shorting Aussie, maybe up around 65.5 to 66. Maybe cable can make it up towards 28.5 or so. I have this line up here. We'll see if they could get the stops here in the next few weeks or several days. And so I'm looking at this now as this was the first wave down that we completed on the false breakdown in cable. And now looking for fib retracements, 61.8's a bit over 128. I think that's doable. I'm looking for fib retracements in euro as well. I think it may have some trouble here at 109.70. If not, I'm looking for at least halfway back 110.20. But now I'm viewing this. A lot of people are saying, okay, that's it. The dollar rally's over. Here's a Dixie. We broke this uptrend. We negated the breakout. But I look at the dollar as, okay, this is the first wave of this, or an A wave, which means there's at least three. And I'm preparing myself to re-enter the long side of the dollar. 102 is halfway back. That's doable. There's some support here at 102.75. That's actually 38%. and maybe we even trade towards 61.8. But I'm thinking we find some support um, above 102. So we'll see what happens. It's another negative week. It looks a lot like the yen, but I think the paths will diverge, and it's not going to. The yen could go down while the currencies could still, like euro, still work lower, and the dollar could still work higher. My targets are still up at 108, so I consider this a buying opportunity. Say we pull back to 102, and this was pretty much a 500 pip rally, and we rallied 500 from 102, 102 and a half gives you 107 and a half. If I want to get real bullish, I add 8 onto it, and even at 61.8, that would give you 109. So the weak sister is Aussie. I still don't think Aussie is bottom. We have this 3 drive that will um, come in right around 60 cents. So I'm a seller up here around 66ish, maybe 65 and a half in the next couple days. That pretty much covers the currencies. Take a quick look at the yuan. The yuan still could be in a pullback move here. Looks like a flag. Not sure what to do. So, all right, let's go with the metals now. So down here, I was talking about a buy in gold and silver. Silver was 22.60. That sure looks like a good level now. But now as we approach some resistance here, I'm actually looking for shorts. I have some shorts on in silver, not in gold yet. I'm viewing this gold as not the beginning of the move to over 2,000, but just like the dollar is in pullback mode, the gold and silver, of course, with that correlation, weaker dollar, higher prices, although they did turn before the dollar did in a big way. I'm not chasing this. I'm looking for short positions. I still think that there's a chance, as long as we don't close over, say, 1965, that we're going to head lower and take out this low, and that could take us down towards this 1800 level. So that still plays into the fact that this is a pullback in the dollar, not the major top before a crash. And I'm looking to buy the dollar, just not today, and got out of the way of being short cable 90 pips ago. So that's where discipline pays in. You got out. If you were smart enough to reverse, congratulations to you. Just because I get out of a trade doesn't mean I'll reverse it. So we'll see what happens up here around this 128 to 129 level, because I'm still looking for much lower levels in the dollar. So metals are still running. I want to talk about a couple of, well, I did want to cover WTI because I talked about it on Monday, that I was going to be looking to sell a rally up around the 82 level. I have something on, small position from this 81.40 level. I'm looking for it to top between here and 82 and get another wave down in oil. So let's go the S&Ps. We're at 61.8 back in the S&Ps. I think that there's going to be a failure between here and 45.38 or so. Here's the line. This was the line we broke down from in March. We're testing it now. Maybe we have a throw over. Some people are declaring this a bottom and we're on our way to new highs. I'm not in that camp either. I'm looking to short it in here. Probably wait. I'm not going to put on big positions until next week. So still believe that there's another wave like this to the downside from wherever we peak, and the 61.8 level is 45.04, so that's where we're at. I don't think we're going to go to 78.6. So watching this for shorts next week, and I actually have an idea, and it's a little bit of a tutorial. As you guys know, I've been pretty negative Apple from being early. to, then we had this big break and we're recovering here. But I just want you to pay attention to this. This was a top pick off a market making new all-time highs, right? That's new all-time highs that we had that we're coming off of right now, okay? Microsoft, another example. We made new all-time highs, right? NVIDIA, we made new all-time highs. And that's why I was more negative AMD, because it didn't. AMD did not make new highs like NVIDIA was. So to me, this could have been a bear market rally. So now let's talk about the mega caps all making new all-time highs. You guys remember that? There's Microsoft, this is a new all-time high, and Apple at almost 200 was a new all-time high. Take a look at Amazon. Okay, Amazon is having a hard time surpassing last August high. We haven't even done it. While the S&Ps and Apple, I mean, let's look at last August high and Apple. That was, I believe, here. Way surpassed it. Microsoft. Way surpassed it. Okay, so as far as relative strength and weakness, this Amazon looks like it could be a pretty tasty short. I'm looking to do it maybe sometime next week. I'd like to see a rally back towards, take out this high and trade towards 38. And the other short, I think, is probably the best short on the board is your regional bank ETF. We had this gap down, and if you take a big look, this was just a bear market rally. We're so far off the highs. Look at this. This was just the latest crash. We've had others. So if you look at the weekly, they've been under pressure for a long time. So I would look for a rally if we got one off the break that we had last week. If we had a rally back up towards 46 or 7 to try and fill the gap here, I would get short. It may have that may have been it, but this is your short, the banks, XLF, all the financials, since I still do believe that we're in an ongoing banking crisis that's only going to magnify as people continue to lose trust in holding their deposits in banks or are just looking for higher rates of returns elsewhere. So I believe that's all I wanted to really cover today. Be careful. There's still a lot of data. The cherry on top's the NFP on Friday. But the takeaway is I'm looking at what's happening in the dollar as a break to buy, just not there yet. A rally to sell in cable, we're not there yet. A rally to sell in Aussie, we're not there yet. I have shorts in silver. There's gold. Here's silver starting to come off, leaving a tail. And WTI, I'm thinking that this rally also is peaking between here and 82. We'll see what happens with that. And then we'll see what happens in the S&Ps around, 45, 30 or so. And Amazon and KRE are my preferred shorts. KRE right here down today with the market up. And I'll be back tomorrow with Andy Constant, who's made several appearances recently on CNBC. His Twitter handle is @dampedspring. Be there for that. Andy's work. He actually has a waiting list to be able to get on his feed, his private feed. Partnering up with Jimmy Jude, another well-known trader, has a book coming out this month. I'm looking forward to that. And Mike will be with you in about an hour and 15 minutes to give you his insights into the market. Don't miss Mike. And I'll see you in the room. Don't just count your pips, count your blessings. Adios.